Open any stock market app today, and you are immediately hit with a wall of flashing red and green numbers, aggressively moving charts, and an endless stream of social media tips telling you what to buy right this second. This constant noise creates the illusion that the market is a massive digital roulette wheel. For many, the strategy begins and ends with picking a cheap ticker symbol and hoping to sell it to someone else before the luck runs out. Relying on luck usually leads to a predictable cycle. You buy into a hyped-up tip, the price drops, panic sets in, and you sell at a loss, wiping out your account balance in the process. Strip away the digital noise, and the reality is far more concrete. Clicking Buy converts your cash into a legal, fractional interest in a functioning corporation. Treating the market like a casino makes failure a statistical certainty. Success begins with the shift to an owner's mindset, recognizing that the value on the screen is tied to the physical productivity of the underlying business. To see how that business connection works, imagine a private company called ABC Limited. They need to raise 100 crore rupees to build a sprawling new factory complex. This large square represents ABC Limited's total value. Instead of a bank loan, the company fractures its ownership into tiny units called shares. In an IPO, the company offers these shares to the public. Investors provide capital and receive pieces of ownership. This capital flows into the company's ledger to pay for bricks, steel, and heavy machinery. This mechanism, connecting companies that need money to grow with investors willing to fund them, is the foundational purpose of the capital market. If you decide to sell your stake in ABC Limited a year later, the company won't buy it back. You must find another investor willing to take your place. This happens in the secondary market. Massive electronic marketplaces, like the National Stock Exchange shown here, exist to match millions of buyers and sellers. To prevent fraud, a watchdog oversees transactions. In India, the Securities and Exchange Board of India, or SEBI, serves as this barrier against market manipulation. Beginners often confuse these marketplaces with indices like the Nifty 50 or Sensex. While the exchange serves as the stadium where the trading happens, the index functions as the scoreboard, tracking the combined movement of a specific group of top companies. This means your daily trades occur in a regulated secondary arena, moving ownership between individuals rather than interacting with the company itself. A common misconception suggests that a stock trading at 20 rupees is inherently cheaper or a better bargain than one trading at 100 rupees. To find a business's actual size, look at market capitalization. As shown here, 10 million shares at 10 rupees and 1 million shares at 100 rupees represent an equal total value. The share price alone tells you very little. Accessing this system requires 3 specific accounts. You use a bank account for your funds and a trading account with a broker to execute the orders. The final piece is the Demat account. This acts as a secure digital locker, holding your dematerialized shares in electronic form once the trade is settled. Mastering this basic math and understanding the account structure ensures your assets are legally secured and protects you from the illusion of low share prices. Prices fluctuate based on a constant tug-of-war between supply and demand. These movements are driven by real-world variables, quarterly profits, interest rate changes, and global economic shifts. Traders attempt to exploit these price swings in the short term. As seen on this trading floor, it is a high-intensity strategy focused on minute-to-minute or day-to-day market movements. Investing, by contrast, involves holding a position for years. This strategy relies on the growth of the underlying business and the mathematical power of compounding returns over a long horizon. Regardless of the timeline, equity markets offer no guaranteed returns. If a company's business model fails, the share price can fall to zero, resulting in a total loss of capital. This risk necessitates a strict personal framework. Before buying, verify how the company generates profit, define your reason for ownership, and ensure the decision is rooted in your own research, rather than a social media tip. Rather than a game of luck, the stock market functions as a mechanism for long-term ownership, a place where discipline allows an individual to accumulate growing stakes in the global economy.